Today, Bitcoin and Ether prices pop. Yuga Labs gives the first tour of its other side metaverse game. And Core Scientific's CEO explains why crypto miners are selling off reserves. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto prices are starting the week with a major rally. By noon Eastern, Bitcoin soared back above $22,000. Ether jumped back to $1,500, and Polygon, it was up a whopping 26%. Some have pointed to Ethereum's upcoming merge as the reason for the bullishness. That's slated for later this year. Okay, let's talk about the top stories. First up, crypto-focused stocks are also rallying today. Shares of Coinbase soared 17% by noon Eastern. Riot Blockchain traded 20% higher, while Robinhood gained around 5%. These stocks have taken a beating as crypto prices tanked in recent months, and they might not be totally out of the woods yet. In a new report, Grayscale said crypto could face another 8 months in a bear market. Next, Bored Ape Yacht Club creator Yuga Labs just previewed its new metaverse product, Other Side. Those who bought Other Deeds digital land in the virtual world were given a first trip tour of the game, and the announcement sent the price of ApeCoin soaring more than 20% today. Of course, buying an Other Deeds token proved almost impossible during the auction in May, thanks to failed transactions and skyrocketing fees. Last, Dutch regulators just fined Binance more than $3 million for operating without authorization. The country's central bank told the crypto exchange that it was operating in the Netherlands illegally as early as August of last year. The fine was near the maximum the central bank could fine due to, quote, the gravity and culpability of Binance's breach. Now, Binance has filed an appeal over the fine, and the spokesperson said the fine marks a pivot in the company's talks with Netherlands regulators. Okay, for our main story of the day, we're tracking sentiment among crypto miners. As inflation makes operating costs rise and the current bear market keeps revenue low, miners are facing increasing pressure to sell their crypto reserves to keep their businesses afloat. Core Scientific is the largest Bitcoin mining company in the U.S. Last month, it sold off more than 7,000 Bitcoin, worth about $167 million. Crypto World's Mackenzie Sigalo spoke to the company's CEO about that decision, and they discussed whether the fear over miners' capitulation was overblown.
Data from CryptoQuant showed that reserves for Bitcoin miners dropped by about 14,000 Bitcoin since last Thursday. Core Scientific sold most of its Bitcoin back in June. Is this a sign that more miners are going to start liquidating their Bitcoin stake amid this crypto winter that we're in? Or is the hype over these declines overblown?
It makes a lot of sense. One, with the state of capital markets and the unavailability really of outside funding that had been abundant for the prior year, at the end of the day, like any other business, Bitcoin miners need to pay their bills. And we mine and earn or produce Bitcoin, but our cost, expenses, and liabilities are in dollars. And at a point in time, we need to match, if you will, that what we're earning in Bitcoin to the expenses that we need to pay would be point one. And so, to a great extent, I think you're seeing what will be a long-term trend. As our business matures, we're in fact becoming self-financing, self-funding, and you'll see mining companies sell sufficient Bitcoin to make sure that they maintain strong balance sheets and pay their expenses when due. The second aspect to it is that it is quite sensible in a turbulent market time, and you've seen this in many industries that experience turbulence, is you go to cash. And so I think what you're also seeing is conservatism at play, where many of us in the industry, looking at the capital markets, looking at the uncertainty probably for a period of time here, it will settle out, no doubt, and it seemed to be beginning to. But when you face turbulent times, you want to make sure that you've built a conservative balance sheet, that you've got resources to ride through those times. And so I think that you're seeing some of that as well, Mackenzie. Certainly that would be the case as it relates to us. We've been through turbulent times in the past at our company. I certainly have a good bit of experience in distressed markets, and it makes sense to build a conservative balance sheet in that kind of an environment.
Can you explain a little bit more about why Core Scientific chose to sell its Bitcoin and what the result of that decision has been? Do you feel that you are now better braced for future volatility?
It really relates to two aspects of our company. One relates to our growth. And at our last earnings call, one of the things that we mentioned was that we felt that we had sufficient assets and capability on our own balance sheet, our own income statement to fund our growth through 2022, which, as we had said, was to get to a point where we're operating either for our own account or hosted over 300,000 servers. And going to cash, kind of insured, if you will, aided us in making sure that we have sufficient liquid capital to handle the build out for the growth that we had talked about previously with our shareholders. And then the second aspect really just has to do with our experience in these kind of markets.
So obviously we're seeing a bounce in prices today. We had positive momentum heading into the weekend. Is this a sign of better times to come for both investors and businesses, or should we be bracing for more pain?
You and I have talked in the past about, and I've spoken about, a need in all early industries. There seems to be what I've referred to as a consolidation and cleansing phase. And we're certainly going through that. That said, there was tremendous pressure put on the price of Bitcoin by the liquidations that occurred and by these market events. And we've actually been quite pleased at the resilience of Bitcoin, its price, and the Bitcoin network. And we think that sort of the big events, the big bankruptcies have occurred. We're certainly not directly aware of any other, what I would call, large at-risk situations. And so if we've worked our way through these big high-pressure situations as we have, then I think it's fair to say that, yes, we'll probably see less pressure on the price of Bitcoin. We'll see more optimism, and with less volatility, you probably get more support.
So what are the biggest headwinds facing Bitcoin miners right now? Is it the price of Bitcoin, or is it more inflation and the cost of energy?
There's the obvious answer, which is when Bitcoin prices are higher, our business is better, because there is tremendous positive operating leverage in this business. Over certain levels, every dollar increase in the price of Bitcoin is 100% operating income to Bitcoin miners. So yes, we would all be cheering loudly if Bitcoin were to get back to $35,000, $40,000. There is no doubt about that. Also, clearly, the price of energy matters. But what really matters is productivity. And there is this interesting aspect of Bitcoin and the Bitcoin network, in that what we would refer to as the self-correcting aspect of the Bitcoin network, which is to say that as prices fall, global hash rate, or the competition for the production of Bitcoin, decreases as less efficient miners come off the network. As less efficient miners come off the network and global hash rate declines, and it has been in decline more or less over the last month or two, our machines get more productive, and thus the cost of energy, if you will, per Bitcoin produced goes down. So there's a bit of an offset against that ties into Bitcoin price, energy price, and productivity.
Okay, that's all for Crypto World today, but you can find so much more over at cnbc.com/cryptoworld. We'll be back again tomorrow, and we'll see you then.